place, the delta that you're seeing here will become almost invisible because the volume is going to change dramatically, obviously. So what we see beforehand disappears into almost nothing. So let's get some macro context to where the liquidity is. You can see it's been relatively neutral, hasn't it? They seem to be quite happy with the bid-offer spread just now. So not a lot of information from this. It looked as if in the early stages, it looked as if this little phase, remember the way you do this, guys, is you're not looking at the price charts, you're looking at the delta charts. I want to see real money buyers or real money sellers coming in. So there's a real seller there. It makes a lower low. The price does not. So the dealers must be buying this move. Somebody must be buying this move. So there's definitely a buyer here. When that delta gets very punchy, you can see it takes out all of those levels. The price doesn't. The price literally doesn't take out those levels by any more than a single tick. Somebody is selling the top edges and rotating the price back down. As the price rotates back down again, we get a lot of selling coming in here. The price stops dropping and we get a buyer coming back in here again. And that's obviously that trade there. And there's a lot of selling coming in here. It's nowhere near the bottom edges. These are dropping down towards the bottom edge price. The dealers at the moment are long equities, not by much, but the dealers are long by equities. Does everybody understand and get that story so far? Would everybody agree with that story? If they were to look at this at the moment, you would be currently long equities going in for the top edge squeeze. Yes? Thought so. Cash open in just under a minute, guys. We'll get our first read of the day from the volatility traders. Let's see if they are bullish the way that the dealers are bullish. Now, I don't like the buy side trade, by the way. I think the trade looks rotten. I would rather be selling some top edge NASDAQ, to be honest, rather than this dealer trade that's obviously showing up on the screens just into this cash open. But you know, certainly the big trade on the NASDAQ going into the cash open is a buy trade for sure, 100%. So I'm not selling the NASDAQ. I am not selling the NASDAQ. The dealer bought up a lot of inventory before the cash open, guys. And there's the big upside on the NASDAQ, as expected. Dead obvious, isn't it, guys? Dead obvious. But as I said, I didn't like the dealer position on the NASDAQ. I far prefer to be selling Qs on upticks. We talked about running the stops up into that 15,600 handle level. And I think that's exactly what just happened there. They ran some stops in there and they're now balancing out in the middle of this area. I sold some heavy NASDAQ at the top edge there, guys. Heavy NASDAQ short for me. And we've just seen a very, very big profit on it. It was almost too fast to get the trade on, guys. But I did take a screenshot. I did manage to get some of it onto the NinjaTrader screen. And I'll take a quick screenshot and I'll show you what we lent against and why and all that kind of stuff. Brilliant trade. What a trade. That was a ripper, guys. That really was a ripper. Stunning. Okay, so here's what happened at the cash open on the NASDAQ. So you can see my sell trade. It's pretty visible. We'll zoom in a little bit. So you can see where I sold. I sold against that yellow Baltic, right? So we've got the sell on. So there's my sell price there on the Qs. Pretty obvious, pretty easy. Nothing dangerous about it. And I shouted, I would rather be selling the Qs. I'd rather be selling the Qs than getting long into this Q bid. And the reason why the market spiked higher was because the dealers bought up everything ahead of the cash open. Take a look at the deltas going into the cash open. Now the deltas going into the cash open was this phase here, okay? That's the deltas going into the cash open. This is the cash open. So the deltas going into the cash open are quite clearly, there's a lot of sellers coming in, right? So the price should be dropping, correct? Everybody gets this. Everybody understands this. Everybody's 100% about this already. So when I drag my chart through and I start looking at this phase of price action before the cash open, what's happening to the price? What happened to the price in that phase? The price was going up. So the dealers were getting long inventory, weren't they? The dealers were getting a lot of buys in here. A lot of buys, and then the dealer popped the price up, ran all the stops, gave me a great opportunity to sell the NASDAQ against this storyline. And obviously all I did was then pop a big sell into the top edges on our own account, made an absolute killing on the trade, and obviously we just managed to swing that one beautifully off the top edges and made, as I said, made an absolute fortune on it. Nothing wrong with that, guys. Nothing wrong with that. So kind of volatile start to the day. Quite happy with that. Kind of volatile start to the morning session one here. Dealer liquidities. Unbelievable how much money you can make if you pay attention to the dealer liquidities and how the dealer liquidities are paying out. And then obviously your next port of call is to start looking at the pricing of the markets, trying to figure out what the pricing of the market is by looking at the pricing of the markets, looking at the various aspects of market pricing from a volatility context, from everything else, trying to figure out whether there's a buyer in there or a seller. Pretty easy stuff to do. Just take it down into a lower time frame at the cash open, literally as low as you can take it, 5-second charts, and just try and get into that opening cash bell and then see what the dealers are doing, see what the specialists are doing, see what they are suggesting is the market move. You can get context to this as well, because you can obviously look at it in relation to what's happened in terms of the bigger macro picture, and you can look at it from the shorter term picture as well. Now you've been remembering one thing and one thing only. I was very bullish the cash close, correct? So am I happy with the cash open? Absolutely correct. So if you remember from my tweets last night, if you just check out my tweets last night, you'll remember that I was very bullish the cash close. No, you weren't. I was. Honest to God, I was very bullish the cash close, because then we sent out a tweet when the market went bullish above the green. We suggested that it was green buy side only. Now, it's not a difficult one to see it, guys. It's not that difficult to see why you should be bullish at yesterday's cash close. Not difficult to see at all. Just purely from the volatility angle, there was a very, very strong storyline. And as I said, this is my primary go-to indicator, is simply the price of volatility. It's as simple as that, guys. If they're pricing that volatility up or down, I want to be in the deal. So when I look at the price of volatility, this is what it looks like at the close. Anybody else feel my bullishness of that trade? Anybody else would have loved to have taken that trade? What do you think? Look at how good that opportunity is right there, guys. Anybody doubting why that was a huge opportunity? It's crazy good, isn't it? It's just a walk in the park. It's just a walk in the park. So you can see what happened to the cash open. We've obviously just opened the gap open. The volatility has been priced cheaper again still. And obviously in this case, I've taken a spike on the Qs. That's against a long position on the S&P. The S&P is now popping hard. We are in amazing shape on this. Absolutely amazing shape on this now. So nothing much to comment on, nothing much to do here. Remember I talked about relating each individual candle. John will remember because he was the one person that acknowledged the conversation. But I talked about the individual candle itself, and we asked about looking at each individual candle. You can obviously look at it on a macro scale basis, but each individual candle has a narrative. Every candle has a possible narrative as well. So when you're looking at individual candle narratives, it actually becomes very, very obvious. And this is on a 1 minute chart. So, it's even more obvious on a 1 minute chart what the dealer positioning is on the S&P here at the cash open. Let's just show you what I mean by that. So here's the S&P at the cash open, furthest away chart here. One of the things you'll be able to recognize is at the cash open, we had selling deltas, nothing to see there. Selling deltas, selling candle. Selling deltas, buying candles. So what does that tell you? Dealers are accumulating the selling. Dealers are accumulating the selling. So dealers are getting long after the sell-off that we were involved in. So the dealers are starting to pick up longs here, aren't they? So there's the lean there. There's the Baltic right there. So there's your buy trade right there, correct? There's your Baltic. There's your lean. There's your opportunity to take advantage of this bit of business. And obviously from that point onwards, there's no buyers. There's no buyers showed up here. It spiked, but the price carried on massively to the upside. In other words, the dealers are buying lows and selling and pulling from highs, correct? This is like pulling teeth, guys, honest to God.